This is wonderful. I mean, it's wonderful to have front run these institutions by many, many years.
Where do you see kind of like this fundamental ceiling, if there is a fundamental ceiling, for digital assets over the next 5 to 10 years?
Theoretically, how high could it go? There really is there's no ceiling. I definitely think there's plenty of room for everybody who hasn't onboarded yet into crypto. There's plenty of upside. It's definitely worth it, in my opinion, if you have a longer term time frame.
What is your personal strategy if you only had $10,000?
If I had $10,000 right now, I would put at least half of it into
Government officials insist we will continue to keep you informed as this story unfolds.
Welcome to the Money Block with Matthew J. Moore, the Bitcoin-focused program that's waking the masses to the fiat money Ponzi scheme. Money is changing, and your freedom is at stake. So stick around and learn how to empower yourself for this new digital age. Now, here's your host, Matthew J. Moore.
And welcome, America. Welcome, world. You have tuned in at the right time, right place, because this is America's Bitcoin-focused program. We are literally all over the place, whether it's television, radio, online. We're here, we're there, we're everywhere. So welcome, all of you Bitcoin newbies, lovers, and experts. And man, I have a very special treat for you today. A guest that I've had on many, many times and is a good friend of mine. But I want to kind of just tease something for you real quick. If you are new to this space, if you are, thinking about investing in Bitcoin and cryptocurrency, or maybe you already are, but you're still kind of green, well, this episode is going to be perfect for you because I've got the right guy who's going to kind of spell it out for us in the best way possible. His name is Jerry Robinson. But before I bring him onto the stage and we get into the nitty gritty, I just want to remind you and let you in on a little secret, okay? During this show, you're going to see a QR code probably pop up right over here on the screen. Be sure to take out your phone, scan that QR code, because you know what? I have a free gift for you. It's my way of saying thank you for tuning in and participating in this show. It's a free download of my Amazon best-selling book, Foundations for Liberty, which will give you all of the right ideas, principles, and tools that you might need to remain sovereign in this new digital age. And if you're watching online, hey, be sure to share, comment, like, subscribe. I want you to be a part of the conversation. Let us know what you think. All right, well, without any further ado, I'm going to bring on Jerry Robinson. Like I said, I've known him for some time. He is an investor, he is a trader, author, and founder of followthemoney.com. Jerry, it's so good to see you again. Thanks for coming on the show. Man, before we dive in, I want you to share in your own words just a little bit about who you are and your background.
Sure, absolutely. It's great to be with you again, Matt. This is an exciting show here. And I got to say, I just appreciate what you're doing, trying to educate the masses. That's really where I've been, too. I'm an economist, trader, trading coach, and long-term investor, financial educator. I spent the last couple of decades helping people understand the markets, understand money, how to build a plan without fear. I started followthemoney.com back in 2010. It started as a simple blog and a kind of a weekly podcast. Since that time, it's really kind of morphed into a full education platform with courses and podcasts and research and a whole members area, weekly trend analysis, charting software, the whole 9 yards. But my story goes back to the late 90s when I first learned how to trade as a day trader. I started as a pure chart guy. I loved the technicals. I like to follow the charts. And over time, especially amid the financial crisis, it became clear that there were cracks in the monetary system. And that, nudged me to start studying money itself. In fact, I was doing that, really got into that about 2005, right before the breakdown in the economic crisis. That eventually opened the door to Bitcoin for me. I was already a gold guy. And then when I saw Bitcoin for the first time, fortunately in 2011, 2012, it was a really eye-opening experience. Mm-hmm. So today through followthemoney.com, I teach, a blend of old school technical analysis along with some modern digital asset analysis.
Well, hey guys, stay tuned. We got to go to break real quick, but Jerry's got some good information if you're thinking about investing or already investing. All right, guys, we'll be right back. This is the Money Block. We'll see you in a minute. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. And welcome back, guys. We are back from break. This is The Money Block, broadcasting coast to coast on BizTV. So thanks for tuning in. You're here at the right time, right place, and we have been chatting and just introduced our guest, Jerry Robinson, who is an investor, trader, author, and the founder of followthemoney.com. Good friend of mine, but we just teased a little bit about this idea of being new to the world of cryptocurrency, digital assets. What are the fundamentals that you got to take into consideration when jumping into this space? Is it any different than regular investing? Well, we're going to find out today. We got the perfect guest to break it down simple, easy to understand. So let's start here. Jerry, man, let's dive deep and start with this idea that you have built this website, this company, followthemoney.com. It's a kind of a go-to place for investors. You're obviously stacking Bitcoin. You're investing in Bitcoin. Digital assets have kind of been part of your play. And like you said before we went to break during the first segment, that you kind of had this aha moment. What was that pivotal moment where you're like, you know what, this is going to be a long-term play for me?
Well, it really began in 2013. That's when I began to accumulate Bitcoin. And what happened was it clicked when I saw that Bitcoin really solved a monetary problem. And it was largely, Matt, because I understood gold. I mean, gold serves this very important role in the global economy. And for a long time, of course, it was considered money. It still is in many ways. But there's a problem with our economy. If you look at the national debt, if you look obviously at the deficit spending, you look at the lack of plans and how politicians just continue to kick the can down the road, you realize that Bitcoin is the very first asset in human history that has a perfect supply transparency. In fact, it's fixed. And it was when I fully understood the supply nature of Bitcoin, the demand was still coming. It wasn't quite there yet, but the supply picture was clear to me that it was going to be finite. There was perfect supply transparency. So I began accumulating it, not trading it. I began accumulating it during that time. So that's when my eyes were opened.
Well, you hit on this idea of supply. Bitcoin has a predictable supply. It's a hedge against currency debasement, which is a theme often found within the Bitcoin ecosystem and even the gold ecosystem. I mean, I think those who are involved and passionate about sound money, gold and silver, it was kind of not for everybody, but for a lot of people, it was easier to understand the concepts that Bitcoin was trying to do in the digital sense. But walk us through the fundamental math behind why that's a game changer for everybody, versus just regular fiat money or maybe investing in stocks.
Well, the math is pretty simple. Every single 10 minutes, new Bitcoin is issued, and it's at a known rate. And so when I never actually got into the mining side personally, but I dug into understanding the mining side and realizing how this thing came into existence, how it was issued. And when you compare that to fiat currency, which has the exact opposite problem, supply grows when a central bank feels like they need to, goose the economy, whereas we have a very specific issuance and emission schedule with Bitcoin. And every 4 years, the rate of emission gets cut in half through that halving process, which we just went through in 2024. But there's no board meeting deciding that. This is a currency without a government. There's no politician making any decisions for it. You can't haul the CEO of Bitcoin into Congress and interview him. There's just no face. It's a faceless currency without a government. And it's unique. It's different. We now have many different kinds of digital tokens out there, so it's somehow many people think that this has been diluted. I think overall Bitcoin is the winner, and I think that it has many copiers, it has many copycats, but I think that holding Bitcoin for the long term makes a lot of sense for me. It's the only major asset where you know the supply, what it will be today versus 10 years from now, 20 years from now. You know all of that. Being able to nail down the supply, Matt, at all times, perfect supply transparency is literally what makes this asset so incredibly unique. 100 years from now, we're going to know what the supply is going to be. We already know it. So that's pretty radical.
All right, so as a profession, you do a great job. You basically break down the markets. You are a professional in this sense, but whether it's Bitcoin dipping below $100,000, whether it's the euphoric price rise. I don't know if maybe it's euphoric, but in gold, I mean, we saw gold have a massive increase in dollar price this year. But what's that one underrated fundamental metric that you use on a regular basis, whether, it's like on-chain demand or institutional inflows? I mean, there's a lot of things we could look at, but what separates the noise from real opportunity in digital assets? Are there certain underlying metrics that you look for?
Absolutely. I would mention three. One of them is just pure volume. So being able to pay attention to the volume as it's coming in, comparing that volume with prior volume and cycles, and also paying attention to how that is relative to average volume over time, over a 90-day period, for example. Another really important metric that I look at is, new on-chain entities that are holding Bitcoin for at least 6 months. So when you look at that number is a major number. These are longer term holders. And so when that group grows during a sell-off, which is what I usually look for, that tells me the smart money is kind of absorbing the weak hands. And then the third one I would mention would be institutional inflows. We've seen a lot of that over the last 12 months. I suspect that number is going to continue to grow. Pension money can be flowing into this. Corporate treasuries are buying Bitcoin. The United States government, we have governmental entities starting to soak up this very limited supply. So, that's what we're seeing. We're seeing institutional money come in. I think that number is going to continue to increase this year. I think retail investors in many ways have been burned over the last few cycles, and right now, there's a chance that we're not going to see them come back in the way they have for a bit. But I think institution is certainly soaking up the excess supply. So those are the things I look for. I really like to see that there's new on-chain entities for at least 6 months holding. I think that's a really key number, or a key metric to watch.
Yeah. Well, and part of your strategy is, I think, correct me if I'm wrong here, but you have a 3-bucket strategy, if I understand. You've got your liquid assets, safe growth, and long-term risk. Can you expound upon these ideas?
Yeah, very basically, just to set up a good financial plan. And this isn't the whole thing. We have our whole 5 levels of financial freedom on our website, but a 3-bucket strategy is part of this comprehensive plan. And so the first bucket is liquidity. This would be 6 months of income. You want that full of cash, right? You want that to be either a emergency pool of capital that you can tap in the case. That way you don't have to whip out the Visa if you get a flat tire or whatever, or a opportunity pool of capital in the event that you run across something that you need cash for. You can use that liquidity bucket. Sometimes cash is king, and especially at the crash. But then you also have bucket 2, which is the safe growth. This is the kind of money that you put into the bucket for growth for the long term, but you want contractual guarantees. Think CDs, think fixed annuities, think certain types of inflation protected treasury securities. And then finally, the risk bucket, the risk growth bucket. This is where you don't get any guarantees. You throw the money in, you're holding it for the long term. Think stocks, think real estate. And this is where Bitcoin lives for me. It lives in this third bucket where it's long-term, it's volatile, there's absolutely no guarantee. And the way that I actually have made this work for me is that I have limited the amount of money that I put into Bitcoin to 5% of assets. I recently saw the Bank of America is actually advocating to its clients to hold between 1% and 4% for its wealth management clients.
I saw that.
Did you see that?
Yeah, that was a surprise.
It's a big surprise, and this has been our stance for the last decade, or the last 12 years, is a 5% allocation. It didn't seem too extreme, and it worked out well for us. And we just continue just to put 5% into high quality digital assets like Bitcoin. And that explains our, that's our 3 bucket strategy. So you have your liquid bucket, you have your safe growth bucket, and then you have your risk growth bucket. Obviously, Bitcoin is in that 3rd bucket.
Well, we have a minute before we got to jump to break, but you do have a book, or maybe a couple books. Can you share with the audience where they can find more of your writings and your content?
Yeah, we have lots. We have a book called Bankruptcy of Our Nation, which really lays out the case for Bitcoin investing, even though we really don't talk about Bitcoin too much in the book. The whole case is made because this book was written some time ago. We also have courses on technical analysis, courses on Bitcoin, courses on Ethereum, courses on Chainlink, and many others over at our website, followthemoney.com. They can just click on the shop page, and they'll see all of our courses there. Some of them focused upon digital assets, some of them just focused upon technical analysis and chart reading. But all of them are designed to educate, equip, and empower people to be able to, take advantage of this digital asset revolution that we're living through.
Yeah, it is a revolution. Times are changing. Money is changing. And I think a lot of people are looking at their life. They're going, okay, AI, crypto, everything's becoming digital. How do I maintain my sovereignty in the coming age? How can I make sure that I'm ready for all these changes? Well, be sure to scan the QR code that you see right here on the screen. You'll get a free copy of my Amazon bestselling book, Foundations for Liberty. Maybe it'll give you those principles and ideas that you might need in order to safeguard and protect yourself in this new time that we're entering. All right, we've got some great content with Jerry coming right up, so stay tuned. This is The Money Block. We'll see you right after this break. AI is here, money is changing, but freedom has never been more important. I'm Matthew J. Moore, the Money Block host on BizTV, Amazon bestseller, and Bitcoin policy advisor. Book my up to 60-minute talk, Redefining Wealth and Freedom God's Way. I'll teach your church, business, or civic group how to secure money, freedom, and faith in the digital age. This is urgent, so I'm slashing my fee from $1,000 to $500. Cover my travel, and I'm there. Scan the QR code now. Spots are filling fast. And welcome back, America. Welcome back, world. This is The Money Block. You have tuned in at the right time, right place. We are syndicated coast to coast on BizTV. So hopefully, if you're into crypto, Bitcoin, this is the right program for you guys. We've got some good content. Maybe if you've just been thinking about investing in digital assets and you're new entirely, well, this show is for you. We've got some fundamental ideas, perspectives, principles that you can apply to your strategy moving forward. So the guest that we have today, I'm going to bring him back on and we're going to unpack some of these ideas. But before we do, I just want to remind you, this is a little gift, a little thank you to say, hey, thanks for tuning in, participating in the show. You're going to see right over here, there's going to be a QR code. Take out your phone, scan that. It is a free digital download of my Amazon bestselling book, Foundations for Liberty. And we'll give you the ideas, principles to help you navigate the coming changes and in order to maintain your sovereignty, because that's all important for us, right? Freedom, sovereignty. Well, also, if you're watching online, because we are broadcasting online, be sure to like, comment, subscribe, be a part of the conversation. We want to hear directly from you guys. But I'm going to go ahead and bring Jerry Robinson back up on the stage here. He is a investor, trader, and author. He's the founder of the website and company called followthemoney.com. He's a friend, somebody I've known for some time, so excited to have him back on the show. But Jerry, before we went to break, we were kind of breaking down some of your strategies, your methods, and I want to just point this out. You've called out Bitcoin's rebounds, off of lows as kind of like this disciplined buy signal. But for those who are new to digital assets, which there's probably a lot of people new to digital assets, what is the first fundamental check mark or process that you go through before pulling the trigger and saying, hey, I'm going to buy this dip?
That's a good question. So for the average person who's out there who doesn't own any crypto, to me, the very first thing to do would be just to, figure up, as I had mentioned earlier, 5% of my assets. I made a decision to have a certain percentage. I think you begin with knowing how much you're going to put at risk Obviously, it is risky to be investing in Bitcoin. And then secondly, to then realize that, okay, this is money that I can afford to lose. If you don't want to lose the money, going back to our 3-bucket strategy, you want to put it in the first or the second bucket. If you put it in the third bucket, the risk growth bucket, you know that you could lose it. And so you have to be aware of that. The way you mitigate risk there is that you diversify across various asset classes, some stocks, some real estate, maybe some of your own business, some digital assets like Bitcoin. So whenever I look at Bitcoin, I would say that the average person should A, figure out how much they want to invest, B, are they okay with losing that money, and then C, the way I would approach it, the way I do approach it, is through a simple DCA strategy. So whenever the market is down, I get to buy more. Whenever it's up, I get to buy less. But overall, it all works out in the wash. So from a technical standpoint, though, one of the keys I look for is, are we in a cycle that is, moving down, or are we in a cycle that's moving up? So are we in an uptrend or a downtrend? And I like downtrends for Bitcoin, right? As a DCA investor, I always prefer to be buying it on a red day than I do a green day. So that's how I would look at it. I would say for the average person out there who doesn't own it, figure out how much money you want to own, how much you want to put into it. Are you okay with losing it? And then begin a DCA strategy where you dollar cost average in over a period of time. I do it on a weekly basis. So every Friday, I buy digital assets and stocks every single Friday. It doesn't matter if the market's up. It doesn't matter if the market's down, but I prefer it when it's down, obviously.
Well, and that might play into this next question and idea, which is mindset-wise. You emphasize riding the trend. I think some people, you're known as maybe a trend trader. But overall, like when it comes to panic, what's the mental mind trap that we have to watch out for? Or traders specifically, what do they fall into? What do they fall prey to when it comes to investing into crypto? And how do you overcome that?
I think crypto is probably one of the very best trading vehicles. Again, I do teach trend trading. I position trade in addition to long-term investing, and they're two very different, activities. Investing and trading, very different. So for the trader specifically, usually FOMO, usually they will buy too late, and they don't realize what they're doing, and then they end up becoming a long-term investor. They buy at the top, and then they write it down, and they say, "Well, I'm investing." Well, you were a trader and now you're an investor. So the point is that I think crypto punishes impatience, and traders can often be impatient. It's almost part of the nature of trading. You're trying to get in and out. So I think the better way to approach this groundbreaking technology is to think in terms of an owner, to think in terms of an investor, and less as a trader. Now, I do trade some of my Bitcoin, but I only do that when we get on the monthly chart and we see that it's wildly overbought on the technicals. I will sell on a overbought monthly chart. Okay, but I won't sell the whole thing. I'll just trim the tree, just take a little bit of off, and then you have that money to be able to put back in when it inevitably comes back down, because the thing moves in cycles. So I do like to prune, and I would call that trading. But I think overall, the smarter way to approach this is to not be impatient and to try to trade in and out, in and out, in and out, because you're going to miss a lot of potential gains. And also, you realize that we are still so early on in the advent of this technology that if you are trading, you run the risk of just not being in it at the right time. So to me, I think just having a core position in the high quality projects, especially Bitcoin, and then maybe trading around it when we are extremely overbought, maybe doubling down when we're extremely oversold. But having a core investment position, I think, is the smart way forward. That way you don't get caught up in the emotions of trading exclusively.
Well said. So we got about a minute, but I want you to break this down real quick. In 2025, institutional demand reached 6 times new Bitcoin supply. How should retail investors think about this? I mean, are they competing and are they coexisting? I mean, obviously this market this last year or last 2 years has been driven by the institutional demand, where retailers have been kind of in the back seat now.
Yeah. Well, and perhaps rightfully so. I mean, retail has gotten punished a couple of times. it's really important in a very brief amount of time we have here on this, but it's very important to realize that this is an innovative technology. And sadly, we've seen it oftentimes leveraged for things like meme coins, or we've seen it leveraged for silly things that really aren't what the technology is all about. And so I think that we, again, have to adopt a long-term mindset. That's what institutions are doing. As they come in, they're not going to be jumping in and out, in and out, in and out. Although they will manipulate the markets, of course, to their benefit, they're overall going to have long core positions. I think this is where the average person needs to be. They need to develop a core position, stop being enticed by all of the shiny objects around them, and focus on the high-quality projects and realize that institutional inflows are icing on the cake. This is wonderful. I mean, it's wonderful to have front run these institutions by many, many years. If you've been in Bitcoin for any length of time, and now here comes the president, and now here comes Wall Street, they want to pump your bags. Great, be my guest. But as far as looking at it and saying, well, it's ruined the party, I don't think so at all. Especially when you think about that tight supply that exists. Wall Street knows what this is, and they're entering in mass.
All right, guys, we got to go to break real quick, but we'll be right back with Jerry. We got more great content to unpack. We'll be right back. AI is here, money is changing, but freedom has never been more important. I'm Matthew J. Moore, the Money Block host on BizTV, Amazon bestseller, and Bitcoin policy advisor. Book my up to 60-minute talk, Redefining Wealth and Freedom God's Way. I'll teach your church, business, or civic group how to secure money, freedom, and faith in the digital age. This is urgent, so I'm slashing my fee from $1,000 to $500. Cover my travel, and I'm there. Scan the QR code now. Spots are filling fast. All right, we are back, America. This is the Money Block, syndicated coast to coast on BizTV. I want to welcome you back to the show. Been having a great conversation with a good friend of mine, Jerry Robinson. He is a trader, an author. He is the founder of the followthemoney.com. And he has got some insights when it comes to principles, ideas, fundamentals when it comes to investing in digital assets. That's what we're covering here today. And some of his investment strategies might be helpful. We're not giving technically financial advice, but this is things he does. And maybe you might be enlightened by that. But before we dive deeper into the conversation and carry this ball forward, I want to remind you that you're going to see a QR code that pops up right over here. Be sure to get your phone out, scan it, because it is my way of saying thank you. It is a free gift, a digital download of my Amazon best-selling book, Foundations for Liberty. Why am I doing this? Because it's important. Sovereignty in monetary policy, in the digital age, how you use your money, how you walk around and enhance your freedom. These ideas, these principles, they're going to be helpful for you in the coming years. So go ahead and download that book. And, if you're watching online, be sure to comment, like, subscribe. We want you part of the conversation. Let us know what you think about what Jerry has to say today. I think he's got some good stuff. But Jerry, let's dive back into it with this question. Sell-offs in crypto, they can be monumental. They can be extremely scary, but it can also be a real opportunity. We were talking about that a little bit before the last break. But do you have a real life story or situation in which you kind of leaned on these fundamentals that you used and turned this into a major opportunity when a lot of people were scared? Yeah, go ahead.
Absolutely. Yeah. I've sat through so many of these cycles now. I guess the majority of them. I sat through the 2014 meltdown. I remember 2018, which was wild. 2022 also was rough. You just go back to 2018, for example. That was one of the highlights where the market had dipped, 80%. The price of Bitcoin had fallen around, 75, 80% from its peak that it had reached at the beginning of that year or late 2017. And people were calling it dead. The fundamentals had not changed whatsoever. The hash rate was still climbing. Long-term investors were still accumulating, but the fear was palpable. I mean, it was really obvious that there was a lot of concern. It was during the 2018 downdraft that I developed what I call the extreme value zone strategy, where we basically take the peak of Bitcoin or Ethereum or any of these digital assets and we look for a 60 to 80% drawdown from the peak. When we get into that 60 to 80% drawdown or fall from the peak, the former peak, that's what we call the extreme value zone. You can really apply it to any high quality company. You can apply it to the S&P 500, which it doesn't happen very often, obviously. But with things that are really volatile, you're going to see that happen sometimes. And that, to me, that's the opportunity. So when it's in that 60 to 80% decline or discount range from a former high, that's where I do a 2x or 3x DCA. What that means is that what I would normally do on a DCA Friday, every single Friday, I either double or triple it while we're in that zone. And I started doing that in 2018, and that turned out to be one of the smartest things that we did. And then we did it again in 2022 when it came down. So when everybody was fearful, worried, concerned, thinking, should I sell? Many people sell in that environment. They sell down there in the extreme value zone. I was buying apparently from people down there. But that's what I look to add. When we get real high and prices are really, screaming high, we're past new all-time highs and things, that's where I start thinking more like a seller, not to sell out of my position forever, Matt, just to take a little, just to prune a little bit so I can have money for those extreme, value zone moments, which are inevitable for this volatile asset.
Mm-hmm. Yeah, volatility's been part of the equation in digital assets, definitely since it's a newer asset class, but also, we had 2024, 2025 bull market. Institutions have been the driver behind a lot of this. We had the ETF launches. We didn't quite. I don't know what your take is on this, but there's a lot of debate. Is the 4-year cycle still at play? I personally am of the opinion that it probably is. But as we're recording this today, it looks like. There's a chance that maybe we're going into a new bear market, but maybe those extremes may not be quite as extreme. That extreme value zone that you were talking about, do we get there? Because even though this last this major hiccup that we had, sell off in October 2025, it was obviously a big wipeout of leverage, but it doesn't seem like I don't know. What's your take on this? I mean, people are trying to figure it out right now.
Yeah. Well, if you go back and you look at the last several cycles, and I lived through each one of them, traded or invested through them, there's something very fundamentally different about this one. We're in the wake of the pandemic, right? The pandemic really changed a lot of things economically, supply chains, et cetera. But one of the things that were greatly affected by that was the economy itself. If you look here at the United States economy, manufacturing output is very weak. It's been in contraction mode for years, except for maybe just getting into expansion mode for a couple of months. So you have a very depressed kind of economy in various ways that often correlate to a rising Bitcoin price. The other thing that we've also suffered through just recently is the largest monetary contraction in terms of the central bank balance sheet in history, in central banking history. Started in 2022, QT, the quantitative tightening. They shaved off about $2.6 trillion of their balance sheet from 9 trillion down to like 6.6 or whatever it is now, 6.7. And so now you look at that and say, well, we've never been through something like that. Well, now we're getting ready to move into a very different environment where we're going to see what? Quantitative easing, very likely. And also, obviously, lower interest rates. We're expecting that in 2026 and beyond. And so that sets up or tees up the kind of liquidity rush that you need to see this 4-year cycle kind of move forward. And so when you look back, the liquidity cycle was kind of moving with Bitcoin. And I think that was part of what was happening. It wasn't just some isolated phenomenon that was just causing it due to its own, emission schedule or something. It was a variety of factors. And when we take a look at some of those factors, we see they're missing in this year. And so I think we may be delayed a little bit. I think that it's highly possible that we move on to see some very interesting price action to the upside in 2026. However, as you pointed out, there is a possibility that we have gone through the 4-year cycle and we've already peaked and we may be in for a winter here. It's a little more difficult to buy that considering the liquidity that we see coming. But nonetheless, I think, we don't, the old saying by Ray Dalio is he who lives by the crystal ball will eat shattered glass kind of thing, so you don't want to try to predict too far ahead or at all.
I agree. I agree with you. I think the interesting element of it all is I heard some people talking, and I don't know if you have any thoughts on this, but whether it's, reduced interest rates, quantitative easing, changes in policy, it could take, even though those things might be positive, it could take, 6 to 8 months for it to really hit the market.
The lag effect.
Yeah, the lag effect.
Yeah,
is that
sure.
Okay?
Yeah. I think that's very possible. So 2026, we could just be in a strange anomaly right now. I mean, everything is really strange right now in the post-pandemic environment. So I think this is one of the symptoms. This is one of the problems. But I think overall, Bitcoin is still heading on this massive trajectory higher. The supply squeeze is clear. The institutions coming in. The government wants in. I think it's very clear that prices go higher. But yeah, there's a lot of confusion in the near term, and a lot of it has to do with the post-pandemic economic environment.
Well, in about a minute, can you share with us, with the changes, seems like some elements are different this time, but on your outlook, has your strategy changed when it comes to the fundamentals in your evaluations of other digital assets in the crypto space? Is anything changing there for you?
Not too terribly much. I have some other projects that I really like. Obviously, I adopted Bitcoin early on. It was the very first cryptocurrency I ever bought. That was back in 2012, 2013, somewhere there. I'm a big Ethereum fan. I bought into Ethereum back in 2017. It was very cheap at the time. I've been very impressed with that project. It solves real problems. It has real users. It's necessary for so much in the ecosystem of crypto to actually function. So Ethereum is one that I think is great. Ethereum checks those boxes. I also think there's some other great projects too. One of the ones that I like a lot is Chainlink. I think this is checking a lot of boxes as well. It's not a way to pay. It's not like a quicker payment method or whatever like Bitcoin promises to be, but instead it actually connects real world data with the blockchain, which is kind of hermetically sealed, and it gets it in there without any kind of snafus. And so I think there's a lot of great projects out there. I invest across probably 7 to 10.
Well, we are going to jump to break here real quick, but guys, we've got some more information to dive into with Jerry, so stay put. I want you guys tuned in because he's got some good stuff to say, and I've got a lot of questions. I don't know if we'll get through them all, but guys, this is the Money Block with Jerry Robinson. We'll be right back. Stay put. AI is here, money is changing, but freedom has never been more important. I'm Matthew J. Moore, the Money Block host on BizTV, Amazon bestseller, and Bitcoin policy advisor. Book my up to 60-minute talk, Redefining Wealth and Freedom God's Way. I'll teach your church, business, or civic group how to secure money, freedom, and faith in the digital age. This is urgent, so I'm slashing my fee from $1,000 to $500. Cover my travel, and I'm there. Scan the QR code now. Spots are filling fast. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. All right, right, we are back, ladies and gentlemen. This is our final segment of the Money Block, syndicated coast to coast on BizTV. We want to welcome all you Bitcoin newbies, lovers, and experts, because we've been having a great conversation about fundamental ideas and principles when it comes to investing in digital assets. It's been a great episode with a friend of mine, Jerry Robinson. He is a author, trader, investor, founder of followthemoney.com. And man, you've been giving us some good wisdom, especially for those who are new to the space, Jerry. So let's dive right into it here. I want people to know that what's coming on the horizon here, because you've said that corporations are stacking Bitcoin as a store of value, much like us Bitcoiners who've been doing that for some time now. But what is your advice or thoughts to maybe those family offices, those high net worth individuals who, they want Bitcoin and maybe they're looking at other digital assets too. But as far as a sample allocation, when it comes to balancing fundamentals and that real world risk, how would you go about that? I mean, give me the skinny on it.
Well, for the average family office out there, high net worth client, I mean, the average person out there, they haven't spent a ton of time digging into the details of digital assets. So I would not jump all in, right? I certainly wouldn't do that. Obviously, with that kind of wealth, you want to be prudent. To me, the 5% allocation works. I think that a 5% allocation is a great place to start. It's not my financial advice that anybody do that. It's what I do. And I think that for the average high net worth office, it might be a good place to start. Apparently, as we mentioned, Bank of America thinks it's a good place to start, 1 to 4% or so. What I would do personally is of that 5%, I would allocate probably a good, 2 to 3% at least to Bitcoin, a little bit more, maybe another percent or so to Ethereum, and then maybe having some stable coins as well for that liquidity. But I would keep it modest. I would let time do the work. I would just be focused upon and exposed to the very best projects, and I would keep it at a very reasonable level. I wouldn't be going all in.
Yeah. Well, good thoughts, good advice there. I got another question for you, but I do want to remind you guys, if you're watching this program, you're going to see a QR code. It's going to probably pop up right over here. Be sure to scan that because it's a link, a digital download, a free gift of my Amazon best-selling book, Foundations for Liberty. And I want to just give that to you as a thank you. But Jerry, let's continue this on. You said that, you didn't, I mean, we talked about this off air, but I want to dive into this a little bit. You've had calm confidence, whether it's been the highs, the lows. You've been in the digital asset space, the Bitcoin space for some time. Where do you see kind of like this fundamental ceiling, if there is a fundamental ceiling, for digital assets over the next 5 to 10 years?
Yeah, I don't think we've hit the ceiling. I don't think we've seen the ceiling. I think that we're very early in the adoption curve for Bitcoin. We're not even at global pension penetration yet. There's so many different areas that still lack exposure to Bitcoin, including, again, back to our previous question, high net worth clients, many of them not even exposed at all. Most people don't own it. Most people don't even still know what it is, okay? Let's be honest. And I think a lot of times the way that the case that was built for Bitcoin was the fact that this is going to become a global reserve asset and replace the US dollar. I'm not necessarily of that mind that that's what's actually going to happen. I think that the best analogy here is that Bitcoin serves as a digital gold. I think that over time, Bitcoin is going to outpace and not replace gold, but I think it'll surpass gold in terms of its market cap. I think it's a superior asset class for the 21st century for those seeking that kind of diversification and also protection from currency debasement. I think the government has made that clear that they understand that. Wall Street seems to understand that. I don't think that we can really fathom quite yet how high this can go. The reason why, Matt, is because the printing presses are literally the solution for our economy.
There's no ceiling there, buddy.
Every time there's a problem, they print. And we know what happens to asset prices when they print. So how theoretically, how high could it go? There really is there's no ceiling. It's kind of scary to think about that it could literally just get out of control. And that's, so I definitely think there's plenty of room for everybody who hasn't onboarded yet into crypto. There's plenty of upside. It's definitely worth it, in my opinion, if you have a longer term time frame. to me, when I buy Bitcoin, I don't even think about selling it, except maybe pruning it, as I mentioned in those overbought situations where I might prune 10% of my holdings. But overall, the core holding, I'm not going to sell it for 10 plus years. We have to let this thing mature. So I'm not in a hurry to sell any of it. But if I didn't own any right now, I would definitely be remedying that quickly with a dollar cost average approach, not going all in.
Yeah. Well, let's talk hypotheticals here. I mean, Bitcoin is the future. Digital assets are the future. But you personally, in this hypothetical scenario, you only have $10,000. We've talked a lot about fundamentals. We've talked a lot about long-term investing. But without second guessing yourself, what is your personal strategy if you only had $10,000? How would you allocate that?
If I had $10,000 right now, I would put at least half of it into Bitcoin. And what I would do is I would buy it over time. I wouldn't even just put that all in. I would take advantage of buying it maybe on a weekly basis to get a better cost basis. I would take the other 5,000 and probably split it up between Ethereum and maybe a few of the other top 10, top 20 projects. I would do my research. I don't want to say exactly what I would do as far as all of those other coins, but Bitcoin would definitely, and Ethereum would probably take up a good 80% of that $10,000. I think everybody can go out and look at the rest of these other projects, do a deep dive on them, kind of figure out which one fits, what they think the future is going to look like. For me, I mentioned a few of those. I think Solana, I think Chainlink, I think these projects are, very well positioned to do very well in the future. There's others as well. So without getting to all that, that's what I would do. And again, I wouldn't just go plunk it in right now. I would want to buy it over time. I think there's a real power to that for the average person. It puts them more in control. It allows them to take advantage of price dips. Just a great way. And quite frankly, I wouldn't want to stop at that. I would want to keep going. I would want to continue just to drip money into these assets and hold for the long term.
Well, we've got about 20, 30 seconds left. How can people find you? Where can they check this out?
Matt, this has been great. Folks can come find me over at followthemoney.com. We have a free podcast there. We have loads of free information. Plus, we have memberships, courses. We have research. We have trading. We have trading software. The whole 9 yards, teaching people how to trade and how to invest better for the long run, whether it's stocks, ETFs, or digital assets.
I love it. Well, we're going to have an affiliate link on the screen, but guys, this has been a great conversation with Jerry Robinson. Tune in next time on The Money Block. We'll see you guys, same time, same place. Adios.
The opinions and suggestions expressed on this program are solely those of the participants and are not necessarily endorsed by program sponsors or any station, media company, or platform broadcasting this program. This program is a product of More Media, LLC. The information in this broadcast is not intended as investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, More Media, LLC, and the company or platform broadcasting this program is not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, More Media, LLC, and the company or platform broadcasting this program makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk.